Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Monday. What's up, everybody? It's Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. We're playing a game of he said, she said with the markets. Moving up, moving down, 30-point gap down, 50-point rally up, and all things in between. So hope you guys are having a great day. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates as they happen. Let's go ahead and dive right into it. All right, S&P this morning, we're up 17 points, but it was a wild ride where we had a very big gap down in the overnight session, followed by a rally higher. So last night in our live trade room, for those of you that are members of TradersArmy.com, we had the conversation about, you know, the potential of getting short candle to candle, and that would probably happen at around the 50% retracement area. And so this happened later in the evening, and we did get a little candle-to-candle short out of there. And remember the way candle-to-candle works. After each candle is printed, you move your stop down to the high of the prior candle. And you got a nice little run from about 28 from about 28.38 to about 28.35. So a little bit of a few points in there. But then overnight we rocketed up. And we've come now to a 15-minute reversal level, and we've actually just gotten a move off this 15-minute reversal level. So I'll try to get this video out fairly quickly. This 15-minute level was the level that we identified last night, and if you were able to get in on this zone, you've gotten a nice little move away, about a 1-to-1, but it's come to the opposing level. So at this point, if you did take this one, take your stop, move it to break even, since we did have this basing here before the level, but it was a touch, and then we are now just starting to get a bit of a move. So take your stop, move it to break even, and that level has come to the opposing zone. So at the very least, you want to lock in a little bit and protect yourself from that risk. But I think as far as where we go today, we now have a little bit of a potential reversal point down here would be the next one for us to lean on, knowing that's a 15-minute zone. If price continues to fall from this 15-minute zone where we are right now. Next level would be on the Nasdaq, so very similar 15-minute zone. Starting to move down, we've gotten a little bit of move down into the basing. Very similar, same 50% retracement where we got a little bit of a pullback. So both of those levels worked out okay in the overnights. Now I'm going to wrap my lines around the origin of this move up, which was in the overnight sessions, but a decent time of day, right? So that right around the European market open, so midnight/European market open, typically makes for pretty good zones. Friday, we had a really nice move down off of our supply level. Let me know in the comment section below if you're able to catch that short on Friday from our daily market commentary as we're now setting up for the next kind of reversal and the next leg. Looking at crude oil. Now, crude oil, I did anticipate a reversal at the gap fill level, whereas unfortunately we filled the gap and then we blew right through it. Now, one thing to notice, based upon your rules and how you're structured, we came really close to it and then pulled away, which would typically convert this to a confirmation style entry. And then on the next, couple of times through, we blew right through it, right? The confirmation style was ignored. So now we've got this next area up here, which is the origin of this speed candle. We typically know that speed candles do tend to get retraced, and so we have our lines up here. We've come fairly close to it now. You may want to consider this because we've come close to it and pulled away in a confirmation style. That's always kind of our rule with levels. If we come close to them and don't get an entry, we switch to a confirmation style. When I move this down to a 15-minute chart, I do have this little level in here for a potential re-entry. if we get a bit of a pullback this morning. So this is just one way to show that news can and will affect market movement. But in the overnights, a lot of these levels are levels that we had already previously established, and we're just seeing the market move off of those levels. Gold gapped up and then traded down. Now, my thought was that I didn't love the gap fill on the gold, and that's kind of what we're seeing here. And so without loving the gap fill on the gold, I actually like this area down here much, much better in gold for later today. Looking at our bonds and currency markets as we head into the day, we had the ZN, which is our 10-year note, on the same thing on the gap down. We looked at the 50% retracement. This one never did give us the candle-to-candle opportunity to play the gap the other direction. And so I'm going to remove all of this noise in here. And now we would look very similarly to what we did in gold, would be this little area right in here for a potential reversal point. Looking at the Aussie, we get the exact same picture in the Aussie as we did in in crude oil, where we came to the gap fill area, almost touched it, and then price rallies way back up. Now that would convert it to a confirmation entry, and in that case, price would have rallied right through the level before then coming back out and then rallying up higher. Now we're sitting at what is a potentially decent reversal level right now. Potentially decent reversal level. So keep an eye on this one to see if we come down out of here. I think this is a good opportunity for a candle-to-candle short, or just leave it alone since we're in this sideways price action. Looking here at the euro. So in the euro, we talked about a potential breakdown, and we did get a decent breakdown in the overnight sessions. So if you took that breakdown short in the euro, you've gotten a little bit of a move from the breakdown, and so now I would take your stop and move it up above this wick over wick level. If you missed the short off of the breakdown, I think you still can take a retest at this wick over wick level. Canadian dollar, stop me if you've heard this, staying between its levels of demand and supply, and no real reason to trade it. Moving on. And that's kind of what we've seen in the Canadian dollar for the past few weeks, as it's been very, let's call it indecisive in its overall movements. Moving on, the Great British Pound and the Japanese Yen. So our pound, we are rallying higher. Nice little move up here over the last, this big candle that moved straight up. Now, as I look at this, my 4-hour is definitely telling me that we could be building a bit of a base. We've got a nice long, a nice trend kind of heading back up. So, kind of zooming in on this a little bit. I like the 15-minute level, but I don't really have a reason to get long. I actually like a breakdown off of this level from the 15-minute chart. Stop it, be tight just above here. But I like a breakdown from this level. And then the Japanese yen, we have this area here where there's a big retracement off of this speed candle where I think we could see a move away. So I'm sorry if I went a little bit quick this morning. I went quick on purpose because I want to try to get this video posted as there's a lot of trades that I talked about taking and moving your stop and locking some things in. So if you have any questions, please send us an email, support@tradersarmy.com. I will talk to you soon.